If you put the chart back up, please, of again, the market cap that was wiped from many of the biggest companies out there that are in the AI conversation. There it is, right? NVIDIA, the most. We told you the kind of slide that it's had. That has presented itself a buying opportunity as we thought it might. In like Amazon, for example, which is down 5.5% from its 52-week high. Bill Baruch saw that and says, all right, enough. And he bought more. He joins us now to tell us exactly why. You've been listening here. What do you think?
I think Amazon is a different story than Oracle. I mean, this is a breakout story. And I think what we're going to see from Amazon and AWS, this is where Amazon's going to shine in that data center build out. And we saw that reacceleration AWS growth. I was on the show a couple of weeks before the report. We had high conviction that we could see a great report. And 19% AWS reacceleration. We got 20% reacceleration. So Amazon broke out above its February record high. And last week, yeah, there was a pullback last week, but for Amazon, it was just a pullback into that February record high. A lot of support there. Now, this name is trading at 26.6 forward. Long run average about 37. So we see a lot of value in here. We added to it in our concentrated portfolio. It's our number one name in our main portfolio is about 6.7%. We increased this in our concentrated portfolio on Friday to make it a 15% holding.
Amy, you're one of, everybody owns it up here. Yeah. So what do you think? Is Amazon a different story here?
I think Amazon is a different story. It has the AI exposure, but it also has a lot of other exposure. I like Amazon for its robotics. I do think if you gave Amazon half the valuation that Tesla gets for its robotics, and I think Amazon is better at robotics than Tesla, which might be a controversial statement.
Oh, those are fighting words.
Absolutely I know, those are fighting words, but
true.
I mean, Amazon's been at this for a long time. Yeah. So we own Amazon. I have not added to it. I'm sort of more, it has still lagged for the year. I still think it can do okay. But if everything that we're saying about AI comes to fruition, and it is as big a market as we think it is, and it is as productivity enhancing as we think it is, there's going to be a lot of other things that also do very well.
I like it. I'm adding to it for positions that aren't the regular size. I think you hit something really important. Not only does AWS and AI help it, but productivity gains at Amazon are going to be really big. I mean, you already read about the robotics. You read about how they're in the retail business, and if they can keep their costs down, when come Christmas season, there's huge. What we always talked about Amazon was when are they going to get the operating leverage? Right. This is the opportunity for them to do it in their warehouses and the execution there.
I know, but what's the valuation? What's the forward PE on Amazon? Because I know you're not paying it for the warehouse. You're not paying it for the retail business. You're paying it for AWS.
Right. It's 26 times forward earnings at this point, which is lower than what it's been historically. So you are.
It's 35 times forward. You know what I'm saying? Like you're paying for AWS growth to lead this company into the future, quite literally.
Absolutely, but you also have other things that it's firing on all cylinders. So you do have a company now that can actually outgrow its earnings expectations.
Amazon could turn on their cash flow pretty quickly if they wanted to. They're like sort of choosing not to, more than other companies.
The other move, Bill, that I want to get to you with before I let you go, Uber. We talked a lot last week, too. I think one of the other interesting stories, the stocks that had good earnings that got punished on the backside of that. We have so there's your 1 week on it. You obviously see what the chart is pretty explicit there, guys. That's perfect. Thanks for putting that up. Baruch, you bought more Uber. Tell me more.
Yeah, it's a top 10 holding in our main portfolios. We're getting cash to work in our concentrated portfolio. Bought Uber to a 9% weighting. This is a free cash flow story for us. The free cash flow per share increased 45% on a trailing 12-month basis. Stock fell, after that. Like you said, autonomous vehicle operations are expected to be unprofitable for several years. That's not our story here. We think the catalyst is a free cash flow story. And in a pullback, $85 is a tremendous area of support. Did not get there. I don't think it may get there at all. So we're kind of holding in $93 to $95 that may spike. So there's a tremendous amount of support here. We think really what I'm getting to here is the overall pullback last week in the equity markets. That the S&P hit a trend line back to the May low. I mean, I think there's a lot of support down there. We've seen early month pullbacks that have then continued to rally throughout the end of the month. And I think this here, we want to use this as a reason to get cash to work for names that we liked in those earnings reports.
Okay.